Good afternoon, everyone. I'd like to welcome you all to the first halftime talk interview of the new season, 25-26. I'm delighted today to be joined by Alicia García Herrero, adjunct professor at the Hong Kong University of Science and Technology and chief economist Asia Pacific at Natixis CIB. Alicia, thanks so much for joining us today.
It's a great pleasure to be with you.
Thanks so much. And as you mentioned, I mean, you're based obviously out in Asia, in Hong Kong, and so let's focus today perhaps and talk a bit about the impact that region has been feeling from. Let's start by asking you sort of big picture question. You know, we've had this sort of 6 months or more now of really dynamic, erratic trade policy coming out of the United States. And of course, we've seen how that's evolved and changed over the last few months in different regions, different countries responding in their own way. But let's look at Asia Pacific as a bloc and tell me what your assessment of how bad the damage of that inconsistent policy has been from a scale of 1 to 10 for Asia Pacific.
Wow, what a great question to start. It's very hard to put a number because the impact has been very different across countries. I would say maybe 5 overall. And let me tell you why I'm still not too negative. Firstly, because some areas in Asia have still its own dynamics, very much related to China. And that's mostly Southeast Asia, ASEAN. ASEAN is hit because they didn't expect these tariffs. They thought all of the tariffs would go to China and they would benefit. This is Trump 1.0. Yeah, this is Vietnam, Thailand. Chinese would invest in these economies to then re-export to the US. Well, that is not what has happened. Yeah, on the contrary, they've been hit in some cases. If you consider the so-called transshipping tariffs, which are higher, say 40% for Vietnam, nearly as much as China. And China could still lower its tariffs. So in a way, they're worse off than certainly was expected, and even possibly worse once we have the China deal, worse than China. So that's. However, because they are in the China-centric supply chain, they are enjoying a more positive outlook for China. Yeah, so China will probably end the year with 5% growth. Stock market is doing well, so they're kind of supported, but that more positive China in ways that would not have been expected. So that's ASEAN. Then you have India. India's economy is actually recovering from quite a bad 2024. So its own dynamics are positive, just that they're hitting the wall with a very high level of tariffs, unexpected, totally unexpected. So the expectations are very negative, but the reality is positive. So you see, it because of
when it hits the ground. Absolutely. Well, let's talk about the reality for ASEAN and India. You've mentioned those two sort of blocks at the moment. How have the governments of those economies in ASEAN, first of all, what adjustments have they made fiscally in the immediate sense of the last few months? Have they been able to adjust quickly enough? Are they hoping for the best that these will be reversed, by the end of the year? I mean, how are governments meant to handle this on the ground?
It's a great question. And the answer is astounding. They've hardly done anything.
Yeah. And is that because they expect these to be reversed, or?
No, because China is doing well. Again, this is ASEAN. So for ASEAN, they have a weaker dollar, it's positive, soft commodity markets, just for most of them positive. They're hardly any net exporter. A lot of a lot of interest in critical raw materials, so that's benefiting Indonesia, which managed to sign a deal with Europe that was totally unexpected because there were a lot of sticking points. So, you know, they're not doing anything because other things are doing well other than the US tariffs. That's the key message here. Some of them have cut interest rates a tiny bit, but because basically it's all a softer environment, they're also expecting lower funding costs because of the Fed.
I was going to say, what are the central bank policy? We're obviously now expecting the Fed has been talking for the last month. Yes, we're going to cut by 1/4 of a point or whatever it might be.
Yes.
Has that sort of stabilized the currency policies in the Asian economies? Is it really actually negligible in a sense?
So the central banks didn't need to cut as much as people had expected because the currencies did not appreciate as strongly against the dollar as expected. So this is what I'm saying. The financial conditions have actually supported their situation. So they've not taken major measures. On the fiscal side, they don't have much space generally because they're still swallowing the post-COVID, world of bigger debt. This is true for many countries. So they are quite cautious in not going too far. But the other thing is that there is also a dynamism in Asian economies. I already talked about about India. But let me give you the example of an amazing case, Taiwan. Taiwan in the first half of 2025 grew 8%. This is an elderly, they have aging issues worse than China to the level of South Korea. I mean, nobody expects Taiwan to grow more than 2%. I mean, this is their probably higher than their average growth.
So what was behind it? Is it a chip manufacturing boost or what?
Totally. Yes, that is it. So because there's been huge front loading for the AI revolution, this is not only tariffs, this is the AI revolution.
Of course, that's compounding.
Exactly. So that is also pushing Malaysia, which is packaging for chips. It's pushing anybody with South Korea also doing slightly better thanks to the AI revolution. So, everybody focuses on Trump, and I get it, it's important, but there's many other things happening that are supporting Asian economies, and in a way, making leeway for the governments not to need to take extreme measures, which was your question.
Yeah, which is great. And of course, adjusting policy as they go along. I mean, that's what it is, right? They're going to have to adjust one way or another. We mentioned about Taiwan, very specifically a manufacturing boost, which again is boosting its neighbors as well from a supply chain. Let's talk a bit about supply chain, because of course, you've got tariffs, but we've also had a lot of nervousness in the last year around supply chain because of regional wars, where we are in the Middle East, and you've got the sort of South China Sea tension. And of course, from a planning point of view, I mean, how are these countries, from an industrial planning point of view, being impacted from a supply chain? You had a shipbuilding in China being impacted, things like that. Have we seen adjustments in industrial policy, in infrastructure delays, in these growing, developing economies at the end of the day?
So I started with the good news. This is your first podcast, kind of
start positive.
Adelante, as they say in French. So let's be positive. But there I'm sorry, I have to switch because of your question. And I've been writing a lot about supply chain reshuffling for years and looking at the numbers. There's been a lot of hesitation to reshuffle the supply chain because it was very costly. So even if everybody knew, okay, we need to do this, I don't know, like Apple or Foxconn for that matter, yes, they would announce plans in India, but they were tiny compared to, the overall size of their endeavor in China. So China was still, dominating the supply chain. But frankly speaking, I think Trump's tariffs are relevant enough to produce what I call a tsunami of supply chain. I think this is going to happen. So while we're not yet noticing them, because so many other positive dynamics that I tried to explain in your first question, I think companies are still reluctant because they think, okay, let's see, maybe things will change. I mean, there's a lot of uncertainty. Let's wait and see. So everybody's wait and see. But, these tariffs are accumulating. And frankly speaking, I don't think it's only going to be US tariffs, if you ask me. If you are Japan and you have to swallow that space that you need to make for the US in your economy, you're going to hit on others because you don't have any choice. So for me, most favored nation clause, I mean, WTO kind of pillar of treating everybody equally, other than, better if you have a free trade agreement, but at least equally without, I think that's over. So that's what's going to produce the tsunami in supply chains, because there's going to be places where you simply can't operate because that economy will be hit by US tariffs, maybe Japanese tariffs, maybe European tariffs, you name it. And that will be impossible to bypass. So I do expect, to your question, massive reshuffle in supply chains down the road. It's just that everybody's waiting and we can't see it yet.
Yeah, I mean, massive reshuffling in supply chain. And, as we've seen, massive, perhaps even on a bigger picture, reshuffling of partnerships. I mean, you've had the BRICS expanding over the last year or two, membership. You've got, I just read an article this morning on this new FITP, which is a UAE, New Zealand, Singapore initiative for a possible new sort of open trade block, which is a kind of cross-regional. I mean, it's still a work in progress, but I mean, interesting. They will probably see adjustments to memberships like the WTO and new ones made up. Let's just focus a bit, Alicia, please, on China. Obviously being the largest energy consumer even in the region, and of course that impacts where I stand here, which is the Gulf and energy supply into that country and into the region in general. But I mean, from an energy point of view, I'm just curious to know, from an economic point of view, again, how is China meant to now look, let's say, to the 6 months ahead? What do you think its strategy is going to be in terms of how to handle Trump's tariffs? They've had some time now to adjust how they respond. And how is that impacting its economic planning? China is doing okay, but it's certainly taken a shift, hasn't it, the last year or two, down to that 5% growth. So how should it be planning as it goes ahead?
So let me answer that question in two ways. First, short term, and then medium term, because I actually think that's very important for the Gulf. So short term, by the end of the year, China, you won't notice a bit. China will reach its 5% target for this year. China needs to tell the world, I can handle Trump's tariffs. And that means that they're actually running a fiscal stimulus, mostly on infrastructure, probably. So this huge hydropower plan in Tibet, and a lot of actually upgrading of the grid. So things they need, and that's fine. Most of which, by the way, if you think about the long term, are not very positive for the Gulf, because they are trying to creating self-reliance also on energy, whether it's renewables, but also hydro. They need the grids to upgrade to be able to actually generate more energy out of the massive installation of renewables. Now they don't generate so much because the grids can't take it. So, they're really trying to be more self-reliant. This is my long-term here, is that China will need less energy for two reasons. First, because they're going to, make sure that their own capabilities, whether it's green, whether it's nuclear, whether it's hydro, that they are stepped up, because they also need that to grow. You see, this is because the export engine is at some point
it's certainly having its challenges already.
Exactly. But the second reason, and this is the long term, why I think the Gulf needs to think, India needs to think, probably ASEAN, Africa. I mean, nothing that the Gulf is not doing, but I'm just saying China will be a much smaller, and this is key, importer, not only because of what I just said, but because its economy will grow much less. So my estimates for 2035, and it's a long story, but because of demographics hitting China more slowly than people think, because of the urbanization process still happening. So basically, it's the rural areas that are getting decimated, but there's no productivity there. So it doesn't really matter as long as people still move to the cities. But that's going to end in 2035 because it's going to be fully urbanized. So the fall in the population will hit productivity because that's where you're not going to have the workers anymore. Not now. You can see unemployment figures in China because this is still happening.
Of course.
But long story short, China will grow 1% according to my estimates. And I can tell I'm not the only one, around 2035, 1%.
Wow.
So that's the energy demand won't be the same.
Yeah. So the Gulf countries have 10 years to plan for that. And in the interim, obviously, that's going to gradually adjust down to that 1% if it materializes. So how should Gulf energy producers, do you think, be looking at that? I mean, is there enough slack to be picked up by other ASEAN economies who are, the likes of Indonesia, Vietnam, as you said, growing very, they have a very good growth trajectory. Or as the Gulf is already doing, accepting the fact that energy demand is coming to, is slowing down into that region at least, perhaps not in Africa. How do you think big energy producers should be looking at that?
Okay, so I have good news now, and the good news is India. So my calculations of India's growth, and they're quite conservative, more than what we read in official documents, would bring India to a size in terms of GDP similar to China by 2050. This is what. So India now is a fifth of China. So just imagine the dynamics. On top of that, India's the transition, as everybody knows, transition plans is 2070. It's really late.
Yeah.
You need to add the Trump factor to that, probably even later. And we know that because Indonesia has already kind of, announced a delay in its Indonesia. But I find it very difficult for India not to do something similar because the dependence on China for renewables is such that there's no interest in India to be so dependent, just achieve a target that now the world is no longer as interested as it used to be because of the US. And also because Europe has to make choices here, yeah? They need a deal with India. Europe has been negotiating for years, and they know that the acceptance of a slower energy transition is in between the deal. This happened with Indonesia, as I mentioned before. So, all of this to say that the Gulf will have more time, maybe not from China, but from India, time and actual demand. Time because they will delay the transition, and because the economy will continue to grow very fast. So that's all energy demand.
Yeah.
So it is just a switch, but it is important to make the switch. Because I sometimes feel that there's this idea that it's only China and that China is going to, but that and nothing wrong with China. That's not the point. It's just that China will be a mature economy with everything that's
switching to services. It's, as it said, the renewables drive, etc.
An electro-state. So that is extremely important. A mature electro-state economy. That is not good for energy demand.
No, but India will take much longer to get there, as you said, and its priority of energy demand is so huge, isn't it? Although it does have a transition trajectory. You mentioned Europe, Alicia. Before we sort of wrap up, I know that's not your specialty. You're not based in Europe, but in terms of this whole energy transition, shift in sentiment around the energy transition in the last year or two post-COVID, the energy security thing has been obviously up front and center, the Russia equation playing into that, obviously the Russia-Ukraine war, Russian supply, and even big corporates like Shell and BP outwardly saying, we're still in the energy transition, but the world needs our oil and gas. So, and Europe as a bloc has always been at the forefront of transition. From a regional point of view. Do you feel the hesitancy there as well? Is that beginning to impinge or?
Yeah, well, for full disclosure, I'm actually affiliated with Bruegel, a Brussels think tank, very much into energy transition. That's kind of our mantra and our belief. just to say that, yes, I know a little bit what's going on in Europe. And I would say that these two forces is still not clear. So on the one hand, politically, European Parliament, I mean, there's more, the new parliament, if you want, no longer so new, but has shown that it has different priorities, defense,
Yeah.
you know, and that is, as you said, that is a signal that Europe could be delaying its transition. And frankly, there may be some delay because that pressure, political pressure, is important. But we still have major economies, say Germany, still the Greens play a role there. We also have the Commission. We have
the Fit for 55 package and all those initiatives.
You still have a lot of believers at the Commission. Vice President Teresa Rivera is an example. She would do anything for the green transition. So you still have this push internally. And the question is, who is going to win the race? Because it's not clear. You see, like the executive is pushing. The legislative, the parliament is not. That's kind of where we are in Europe. And in different countries, you have very different realities. Those who think they have a comparative advantage, this is Spain, for example, they're pushing very hard because they think the transition will give them, will put their economies at an advantage, given that they've been faster than others. Those who are still, you know, struggling with their other advantages may think differently. But you know, there's many that are still pushing for transition because nuclear, France, if you actually move to nuclear plus renewables, France will be very much into that. So it's not clear. I think for the Gulf, the idea that Europe will certainly delay the transition might be too optimistic. It's not clear yet. It's just a shift of priorities towards defense, but there is still a lot of, you know, like executive interest, if you want, to get this done. And therefore, I'm not sure that it will be massively delayed. It might be slightly delayed. Yeah.
The dynamics will continue to play out. So many unknowns, right? But Alicia García Herrero, thank you so much for joining us there on Halftime Talk. I'm afraid we've run out of time already. It's been great to have your insights and look forward to having you on again soon, hopefully.
Thank you.